Hello friends, welcome to my channel SS Stocks. Today we will discuss about Redington. The reason for discussing Redington is I can see a very good chart pattern which will give us a good trading opportunity. Before moving for the video, if you are new to my channel, I request you to please subscribe the channel. Here I regularly bring educational videos on stock market which will improve our skills in trading and investing. So this is daily chart of Redington. The price was 178 in July. Then it got corrected and again tried to move in upward direction and faced a resistance at same level of 178. And in August, when all stocks got corrected, this stock also got corrected and taken support on at 136 level. At 136 level, if we can see from the chart, this stock has taken support twice. It is in September, 8 September and 21st September. So this is a good example of double bottom. And whenever this type of chart forms, this stock will now try to move in upward direction. Our first target will be this recent high, and second target based on this double bottom formation can be 184, which is 30% from here. So I think this is a good short-term opportunity for trading. We will try to understand their business. They are working in 4 segments. One is distribution ship, second is services, third logistics services, and fourth emerging business. So in distribution, there are 3 different segments. One is enterprise. In enterprise, they are working in networking, enterprise server and storage. They are working in security. They are working in softwares and also support licensing and subscriptions. In consumer part, they are distributors for PCs, tablets, printers, and their brand partners are Acer, Amazon, Amazon Kindle, Canon, Dell, Epson, Fujitsu, Kodak, Lenovo, Ricoh, almost every famous brand. And in telecom business, they are distributor for smartphones for Apple, Google, Motorola. Another head which they are working is logistic. In services, they work in clouds, 3D printing, HP Indigo, and they are also in distributorship for medical equipments like hypertension, diabetic equipments, eye care equipments, liver diagnostic equipments, ventilators, cardiology, surgical equipments, etc. And their brand partners for these are Bosch, Omron, Philips, Planmeca, Samsung. So they have got a diversified portfolio, and I think this business will grow in coming future. Now we will try to understand financials of the Redington. This company is market cap is 10,985. So this is which is mid cap company. Current price of the share is 141. Book value is 63.2. So price is more than book value. Stock P is 12.1 and industry P is 42.2. So this is one good point. This stock is cheaper than industry P. ROC, return on capital employed, is 21.2, which is good. Return on equity is 16.4, which is also very good. Debt to equity ratio is 0.13, I think, which is manageable. Operating profit margin is 2.48. In case of distribution ship, I think this is good profit margin. Sales growth for 3 years, 11%, which seems to be consistent. Company pros, company has reduced debt, company is almost debt free and maintaining healthy dividend payout. So if we compare Redington with its peers, so ROC of Redington is 21.17, which seems to be better amongst the peers. ROE is 16.45, which also seems to be better in peers. P is 12.11, which is also better in most of the peer industries. Quarterly results, we can see from quarterly results, sales revenue was 11,109 in September, and it shows consistent and gradual increase, and it reached up to 15,504 in March 21. In June, the revenue seems to be less, but this is due to pandemic. If we go to net profit, it was 105 in 2018 and it gradually increased to 303 in March 21 and 237 in June 21. Now yearly results, Sales revenue was 13,758 in March 10, and it increased up to 56,946. So it increased almost 4 times in 10 years. Net profit, it was 184 in March 10, and it reached up to 756 in March 21. It also increased 4 times in last 10-11 years. So this company has shown a consistent growth in past. We can see from balance sheet, share capital is 79, which is maintained. Reserves 997 crores in March 10, and it increased up to 4,856 in 2021. Shareholding pattern, FII is holding 41.22, DIS 15.93, and with public it is 42. But we can see in public 36% is in with institutions. So only around 6% is with public. This is another good point. So financials of this company seems to be good and consistently performed in the past. Now this is ticker tape site. We can see here stock price is less than intrinsic value. This is good point. Return versus FD. Stock has been generating better returns than FD. This is another good point. Dividend returns are good, and this is good point to entry, and no red flags. So forecast, 8 analysts has covered this stock, and 100% of the analysts recommend to buy this stock. Another point, if we go to NSE site, the yesterday's trading quantity was 8,27,000 and deliverable quantity was 5,06,000. So 61.21% is deliverable quantity. Whenever stock delivery is more than 50-55%, it shows that the stock price can go up from here. So considering all this point, I think this is a good trading opportunity, but this is not recommendation to buy or sell of the stock. You please consult your financial advisor before taking any decision. Friends, hope you like this video. Request you to please share with the friends and subscribe. We will again meet with some different exciting learning opportunity in future. Till then, bye bye and take care.